Hey, what's up guys? My name is Daniel Lopez with Invest in You Finance, and today we are going to be talking about how to avoid taxes at your corporate job part 2. If you watched my last video on how to avoid taxes at your corporate job, I was talking about investing in your 401k. Today we are going to be talking about HSAs and how I lost thousands of dollars because I did not invest in my HSA until 2018. So, what is an HSA? Okay, here's what the definition of an HSA account is. But basically, to me, what a health savings account is an account that allows you to contribute pre-tax dollars, meaning money that is not taxed, and it helps you reduce your taxable income. But in this account, you can also invest it and let it grow, or you can spend it on health expenses. But at the end, if you want to remove it when you're of retirement age, you can. Okay, now that we know what an HSA, health savings account is, the next thing we want to find out is how much we can contribute every year to our HSA. I'm going to show you guys the numbers, and then you can decide if you think that investing in a health savings account would be worth it or not. Cue the visual. Hey guys, so we are going to go to Google and type in Paycheck calculator. Then from here, we're going to click search and select the second listing, salary paycheck calculator. After this, we will type in all the information. For the example, we will be using a $100,000 per year salary, just like the previous video. And we will be getting paid bi-weekly. Then we will fill out our deduction. The first deduction will be the 401k deduction. So for this example, we will max out our 401k at $19,500. So it's asking for our gross pay percent, and that will be 19.5% to equal the $19,500 we will be contributing to our 401k. Then every paycheck, they will remove $750. And this will equal, at the end of the year, $19,500 in your 401k. Now let's add in the HSA deduction. The deduction type, we're going to change it to a fixed number. So the way we calculate the fixed number is we get the max contribution of $3,450, and we divide it by how many paychecks we get, which is 26 paychecks per year, and we get $132.69. In addition to the $750 that they will be taking out, they will also take out $132.69 for our HSA. And our paycheck will now be $2,214. Oh, if I only knew what a health savings account was back in 2011 when I first got hired on with my corporate job, I would have saved so much money. I started in 2018 just opening up my first health savings account, and it's cost me thousands of dollars. Either way, let's get into the numbers and see what we come up with. Here's a snapshot of my personal health savings account, and as you can see, the balance is $4,265. My year-to-date total return is 18.35%. In 1 year, I've made 36.92% rate of return, and overall, my accounts made 25.26 rate of return, with me investing in the Vanguard Total Market Index Fund. So as you can see, it's done pretty good considering the market's been great for the last few years. And for my particular account, I have to have $2,000 minimum inside the account before they can start investing. And after that, they invest in increments of $100. Okay guys, now here's the fun part. Let's say that I leave my initial investment in there and I stop contributing to my account. And for the example, I'm going to pretend that I pull this money out when I reach retirement age. So I'm 34 right now. So in 26 years, let's see how much money I will have at a 10% interest rate of return. Wow, guys, I would have $24,479. Okay, guys, now let's see how much money I have lost out on because I did not know about this account in 2011. So for example purposes, let's just pretend that I knew about the account in 2011 and I started contributing $3,000 every year. So 10 years later, after I quit my corporate job at an interest rate of 10%, I will have $47,812. That's quite a bit. Okay, guys, let's go extreme for the last example. If I would have known about a health savings account back in 2011 when I first got hired, and I decided that I wanted to contribute $3,000 every year. And for the example, let's pretend that I love my job, that I knew that I was going to do that same job or be able to contribute to a health savings account for 35 years, because when I first started, I was 25 years old. And hypothetically speaking, we get an interest rate of 10% rate of return. We would have $813,000, guys. So this is the power of compound interest. And this also shows you what can be done just by knowing all types of accounts. I think that that's crazy, but it's totally doable. This is just an extreme case because most people use their health savings account to pay for their health expenses. This is why my personal health savings account is not so high. If I would have invested in my HSA. Anyways, either way, I've been able to take advantage of my HSA by getting LASIK surgery on my eyes. I used to wear glasses because I was nearsighted, but because of my HSA, I was able to pay for LASIK surgery with my health savings account. So that's just another great benefit of having a health savings account. Okay, here's a comparison showing how much you will receive on your paycheck if you do not contribute to your 401k and if you do not contribute to your HSA, you will be receiving a paycheck of $2,895. However, if you do contribute to your HSA and max out your 401k, you will be receiving a paycheck of $2,214. If we go back to the first video, we remember that our paycheck after contributing max to our 401k is $2,317. But now, after contributing our max to our HSA, our paycheck is $2,214. Here are the pros and cons of maxing out your 401k and your HSA. If you do not take any taxable deductions on your 100K salary, the pros would be that you receive a paycheck of $2,895. However, the cons in the situation would be that you have zero tax deductions and you have zero money invested at the end of the day. Now let's look at the pros and cons of contributing the maximum amount to our 401k and HSA. The pros would be that we have $19,500 saved in our 401k and we have $3,450 saved in our HSA. Also, we were able to pay less taxes on our taxable income. The cons would be that our paycheck is now $2,214. Okay, guys, now let's look at the bigger picture. If you do not contribute to your 401k and HSA, you will have zero money saved at the end of the day, but your paycheck will be $2,895. And if you do contribute max to your 401k and HSA, your paycheck will be $2,214. If we subtract this difference, we get $680.79. If we multiply that times 26 paychecks, we get $17,754. So that is the actual true cost of maxing out your HSA and 401k. After you do this, Guess what, guys? You are going to have $22,950 saved in your accounts. Hey guys, this concludes the video, and I hope I was able to show you guys 2 ways you can reduce your taxable income from your corporate job. Hopefully I was able to bring you guys value, and I would really appreciate it if you could press that like button and also subscribe. I will be making more videos on showing you guys how to become financially independent. And to me, it's really a foundation that we need to build if we want to become financially independent. Remember, the whole point is to reduce your taxable income so that you pay less taxes at the end of the day while keeping money into your own pocket. Because guys, we work so hard to make our money, and it's very important for us to know what resources are out there to keep the most amount of money in our pockets. Just knowing about your health savings account and 401k could save you thousands of dollars. So please look into this. And like always, guys, please consult with your tax professionals and your CPAs. I'm not a professional financial advisor, and this video is for entertainment purposes only. I'm just showing you guys what I did. But most of all, I just want to show you guys the power of knowledge and how by just learning about these benefits that are given to you through your company, you can accumulate a massive amount of money. And I know that every single situation is different. So if you can contribute the maximum amount, then now you at least have the tools to figure out, okay, how much can I contribute? And am I contributing anything at all? Also, it's very important to look into your company's 401k match. They possibly match you a certain amount if you contribute to your 401k. So at least you might want to look into that and contribute the minimum amount that your company will match. Hopefully I was able to bring value to you guys. I appreciate you guys watching the video. Please like and subscribe and stay tuned for my next video. Thank you guys so much. I'll see you next time.